Yo, yo, yo. Welcome back to the channel. Today we'll talk AMC, Amazon, and SPY. Just because we want to look at the broader market to see how AMC fits into that fold. Uh, People have been asking me, or, I see like some replies and stuff on Twitter. So I just want to do some clarification right quick. Uh, I'm not following AMC on a day-to-day basis, like all day, from a technical standpoint, because the videos do a good job of summarizing where I stand with the stock. And we're in this really macro falling wedge with these very key levels that we've been talking about for a while. So I feel like I'm repeating myself. And I know most people aren't going to want to be trading AMC anyway, whether that's options or shares. They're looking to buy and hold. So from a long-term perspective, I just don't think that I can provide value to the community in that way, specifically. But if you guys want to see that more on Twitter, just comment down below and let me know your thoughts. Before I get into the price action, let me make my numbers larger because I just noticed that they're too small. Cool. So yeah, AMC, look, this is, to be honest with you, AMC looks pretty good here. Because what I'll say is, we've been watching this 1450 level probably since we were up around $25, right? And we were saying that this 1450 level is a very key level. And the reason that we were saying that is because if you measure from the bottom of the buy button collapse to the top here, this $14.30 is that 618 Fibonacci level. And also coincidentally, the 618 Fibonacci, if you measure up to the pre-market high of $25, is pretty much where you got held up here before you started to see some upside for AMC back in February. And then that obviously led eventually to the June rally. So we wanted to see this 618 hold. And we talked about some other levels. I don't know why I don't have the $12 in here, but let me adjust that. And then we'll say $10 is going to be a key level as well. Let me make it look all nice with the colors. Wait, is that right? I think it is. All right. Anyway, don't worry about it. It's not that big of a deal. So last night I was talking to Lamp, who is my he helps me a lot with the Discord and stuff. If you haven't joined the Discord, make sure you join there. It's completely free to join. No cost. A lot of technical analysis happening there. Good community that we've built. We have a good time, so make sure you check that out. And also follow me on Twitter. If that wasn't clear already, you should follow me on Twitter. Day to day, I'm kind of looking at whatever I think is hot in the market, what I'm paying attention to, how I'm playing a few things. I don't do like alerts or like, what I'm saying, like buy this put at this price or whatever, but more of just looking at the technical patterns that I'm watching and kind of the sentiment analysis that I'm seeing. So make sure you check that out. But anyway, we were looking at this 1450 level, not only because of that Fibonacci that we talked about, that correlation, but also this was the key resistance basically before you saw the June rally, right? And so what that means is that the distribution action that has been happening since then, right? And that's the reality, right? This is a distribution action at this point to fill this liquidity zone down to this 1450. That is what has occurred. So we have now met that distribution, right? We are at the basically the we have gone from, right, the 1450 breakout here all the way back down, and now we are back at the top of the support. And we can trade back down below and still hold this $12 level. And actually, I don't think that that's a completely unreasonable thing to do. But what we've been watching is this falling wedge, so it is sort of reasonable. Now, for the short term, what are we looking at? Whoa, dude. Whoa, dude. I can take these levels off now. For the short term, why do I think that it looks good so far? So now that we have been holding 1450, right? And what you're seeing here is a slight uptrend being developed, right? If you use the bottom of this candle to this body, to this body, to this body, you've now got closes above this trend line a few times. This is probably a fib from here as well. Yeah, so the 1450 is acting as the 786 fib. Let me go see if in pre-market we actually came down and tapped that. Tap that. Oh, no, that's not how the song goes. No, we didn't. Wait, maybe we did. But like this. Do you want to measure from the bottom to the top? It's kind of noisy. It's hard to tell. Yeah, I mean, you kind of just rounded out below the 707. You didn't really just hit a fib right on the nose. But yeah, so I mean, generally speaking, you do have this sort of daily uptrend that you're developing now, right? So that's pretty good as long as you hold this level. And obviously, you're getting this little pop in post market as a result of Amazon earnings. Spy is getting a little push up. The general market is just feeling better. After yesterday, it was doomsday because Facebook completely pooped all over itself. But anyway, this is the trend line that I'm going to be watching now. I would suppose that too. This is acting as a retest. Yeah, so you have a retest of this kind of downtrend that you could be saying that you're having too. Let's see. Yeah, so you could play this as, okay, you had this downtrend, boom, you broke out, now you're coming back and retesting. If you catch this trend line, you could see some upside in the short term, right? And that might not be like explosive where you just kind of blast up to the 20s or the 30s, right? But you kind of establish this level, right? You could kind of consolidate here before you eventually get a breakout on this larger downtrend that you have here. Or you could pop up here, you could come back down before you kind of do this sort of action as well, before you consolidate your way out. But I do still think that the falling wedge is completely valid. I'm not gonna take downside completely off of the table. I'm not gonna say that it's impossible that you see lower lows than this 1340 wick that you had here. I don't think that that's very wise because you do have this sort of liquidity zone that you developed back here that I would still, if I'm just looking at it objectively, kind of be expecting like, hey, we're gonna go back down and retest it, and you can see that it actually is a gap in the VPVR, which we talked about yesterday. But you do have this volume floor, right? So if you hold this like, I mean, you can see here, right? These act as like shelves, like a floor. It causes the price to, it acts as a form of support itself when you have volume in a certain price region, right? So if we go back historically on AMC, you can see that, right? This is a relatively, filled up zone with volume. This kind of 13-ish, kind of 1450-ish level has a lot of volume history for AMC relative to the rest of the price action. And to be honest with you, if anything, you're kind of looking like you want to, overall, you're looking like you would want to at some point come back and test this $28 level for liquidity, just because this is the driest part. Now, again, do you see more downside first? It's possible, right? You can see that this gap down here to 1150 is there, right? You can see this kind of volume gap. You could come down, just swing right out of it. But I think overall, what I'm telling you is that this wedge becomes more and more valid as you're looking at this consolidation coming down to the downside. You can see this wedge has a lot of justification for creating your overall bottom before you have a swing up. And that's my opinion on the stock as it stands, right? So, and I know that a lot of what I just said is something that I've said in a lot of videos going back over and over again. We keep talking about the same things, and that's kind of why I'm shifting my focus and trying to give people more ways to view the market. And to be frank with you, a lot of people have been following things that I've been saying, and coming to their own conclusions and being able to be profitable with this. And so let's talk about Amazon, because I think Amazon is a super interesting play that I've been following. Now, I had long dated puts on Amazon going into this week already. So I had they're in March. And they're deep out of the money, right? So what I was attempting to do is have a relatively low risk, high reward position. That was my goal. I wasn't trying to, it's pretty much, hey, it's all or nothing. It's not a serious, like, crazy position for me. I'm not gonna be super managerial about it, whatever, right? And so going into today, like yesterday, what my decision making became going into earnings for Amazon was, hey, I think that it might be a good idea for me to strangle Amazon. Okay, and if you're not familiar with strangles are basically a position where you take a out of the money call and an out of the money put on the same stock. And the goal is that you're basically betting on a big move. And the reason it's a either direction, it doesn't matter, right? So just for example, if you put $100 on a call, an out of the money call, and $100 on an out of the money put, right? And one of those 10x's, it doesn't matter if the other goes to zero. That's how you play a strangle if you're not familiar, right? So that was my thesis. And the reason that I was doing that was because all of these major companies keep having their earnings. And every time that they had their earnings this season, especially because of the general volatility of the market right now, you're having big breaks in either direction. So you saw a big break down for Facebook. You saw a big break up for Google. You saw a big break down for Netflix, right? So I was willing to take the risk and say, hey, Amazon's a really influential company. The whole market is going to be sitting there watching Amazon. Like, I know that that's what's going to be happening. And there's going to be a big reaction either way. That was basically my thesis, right? So let's talk about how, and I mean, I'm not going to get into like, because what I'm about to say, look, I'll just say it. What I'm about to say is going to sound like it's fucking impossible, okay? But but it's true. It's what happened. So I guess I'll just say it. If you stayed in the video this long, this is, I'll tell you, and hopefully you're not going to be like, you're a liar or whatever, because I'm not lying. But this is honestly what happened. So going into today, right? Yesterday, I bought calls and I added some puts. Okay, so I balanced out my position essentially. I was pretty much even. We dumped. Okay, so this is what was happening. My calls were kind of maintaining value throughout the day, even though Amazon was dumping, and the puts were going up in value. And the reason that this was happening was because the implied volatility was going up on the position overall, right? So the calls were kind of just maintaining their value, and the puts were going parabolic, okay? And this is why I did it I played it this way, because if I would have just been playing puts, I would have gotten trapped. And let me show you why. So all day today on Twitter, if you followed me, you would have seen me charting this as a descending triangle, which is a typically bearish pattern. And so because the price kept kind of coming down to this, it would have been more like this probably. Yep. It kept coming down to this like $2,800 level, right? Which is obviously a key psychological level. Just kept getting pressed down, and then it would pop back up, and find resistance here, right? So this is a bearish pattern. So honestly, if I would have been playing only put side on this, I would have been like, you know what? I'll just hold my puts, right? Now, these were deep out of the money puts. They were up a good amount because of implied volatility, right? The calls were just kind of holding their value. And I mean, I was down on the calls for sure at some points during the day. And then towards the end of the day, the calls started going up and the puts started going up or whatever. And actually, the high of day happened for my puts. My high of day happened in this last 15 minutes, really the last 5 minutes. And literally, this is why the strangle was such a good play for me. And I'm so lucky that I did this. But basically, I was literally at the gym, dude. And I was watching the chart like in between sets and stuff. And I was like, I saw, this kind of pop up like this, and my puts, well, maybe it was this pop up, and my puts went up in value to a new high on the day, right? So even though the stock went up, what is this? The stock went up 1.3%, and I literally tweeted, go find the tweet. I literally tweeted, even though the stock went up 1.5%, my puts were at their high of day. That was the highest that the puts were worth all day. And I was like, man, dude, this is I should take profit on these. They were heavily in profit. And overall it was making it to where the position was going to be free and almost guaranteed profit on no matter what happened at this point. So I was like, here I got the tweet now. So look, you can see here, right? Your puts should be at high of day so far. Swinging them all is very risky. Okay. And look, my sentiment all day was bearish. I was leaning bearish, and that's why I'm saying if I only had puts, I would have probably held them because I was bearish, because I was like, oh look, you got to break out of this descending triangle. You're retesting now, and then you're getting sent back down. I'm like, oh yeah, like I'm gonna swing them. But this is dude, it was such a clever bear trap, man. Like this, I'm telling you, and this is like earnings, dude. I don't think it's smart in this particular scenario to be playing earnings one-sided. I just don't. I think that strangles are the play right now. And so what I did was I sold on that tweet. I sold some of my puts to even out my position back to a strangle, because obviously because they were so profitable, it was no longer a strangle. I was just kind of hedging with calls at that point. I was very heavily put, so I just was like, and I'm gonna get out of these and even it out. And then boom, right? So they come out and they just blast off of this earnings. And now look, they're retracing a little bit, but I mean, still, you got the volatile move that you want in a strangle, right? And so what I just got lucky, guys. Like I really did. But what happened was this turned into a falling wedge, man. Like at the really, it wasn't, and like I said, I was wrong here. I was thinking all day that this is a descending triangle, because it was a descending triangle, but they, here at the last second pretty much turned it into a falling wedge of sorts. And you see this boom, just blast off, which is crazy. So hopefully it doesn't keep tanking in pre-market tomorrow, and I get to close some of these damn calls out. What are we up right now? From there, from the end of the day. Yeah. See, look, we're all the way back down to like 13%, dude. Come on. Don't be hating. I mean, I'm even no matter what, but I don't want it to come all the way back down to where it closed. That would suck. But yeah, so anyway, obviously SPY benefited heavily from this pop on Amazon, because yesterday it got beat up kind of bad because of Facebook. You could make the argument here that SPY has retested the liquidity, and this is behaving as an accumulation, where you're having a backup phase now. I don't mind that. I do think that it is still pretty likely that at some point you see 440 to 445 for SPY, just because this looks like a retest sort of zone. We'll pull up the VPVR just to validate that, because I do remember it being kind of light in the 440 to 445 region. I mean, it's not the worst. Yeah, actually, yeah, I mean, it does look like, since you came down here, you could still have a further retracement of like 442 here. Let me make this a little bit more defined. Oh, wait, hold on. I already have them. Good one. Yeah, I mean, you can see here that this 442-ish kind of region, you do have a little bit light volume there historically. So you could come back and test there. Let's look at it like this for all time. I don't know. I mean, yeah, this 443 looks like a pretty good price floor here. So yeah, I mean, it still fits into my region. If you broke this 443, then you would be looking at the 440. But just as like a retest of this accumulation kind of zone here. But anyway, yeah, I mean, overall, obviously what SPY is doing here looks like distribution, right? Since this pop up back on January 31st, this looks pretty distribution like. And look, you're sitting literally right here at this previous kind of like bounce spot right here, which is 450, which is obviously a psychological level. So you're sitting right on top of 450. I wasn't even looking at the price, honestly. Oh, dude, the prices are small now. Damn. I hope that didn't fuck up the video. Were they small? Yeah, they were small on Amazon. Shit. I'm sorry about that, guys. But yeah, so you're kind of sitting on this 450. Hopefully this holds, so that Amazon can like moon tomorrow morning as well, so I can get out of those calls or whatever. And maybe I'll just keep the puts. I mean, overall, I'll tell you this: long term, I am bearish. I'm pretty bearish on Amazon. I really don't like this chart from a bullish perspective. We'll look at that, and I mean, look. This is kind of like a general market thing, you know, like overall, the market looks pretty distribution airy, right? Like it looks basically like, you know, the price is being held high, so that then they can sell it down. And if you look at a distribution schematic, what this most would resemble what's happening here right now is like a last point of supply, LPSY kind of thing here. And maybe we'll be able to see it better if we but basically the goal of this is, hey, we have a sign of weakness where we break down below the trading range. And now we're going to come back up, retest liquidity at higher regions, and try and get some buyers at higher levels before we continue to dump. But I mean, all of these dark blue lines. Oh shit! Hold on. Put them as boxes first. The lines look better because you can see the levels. But these blue levels are big gaps in the daily chart. And you can see that there's one at $2,600. So overall, I will say that I am still bearish on Amazon. But just for the purpose of earnings, I was sitting here going, hey, I don't want to get bull trapped. Bear trapped, sorry. I'm just going to play both sides of this, see where it takes me, right? But I do still see this as an LPSY. And the same thing with SPY, if I'm being honest. You know, like I do see here. So basically, the way that I would chart this from a Wyckoff perspective, hopefully you're enjoying the video. If you are, make sure you smash a like. I know that I'm going a little long here. But, you know, fuck that. It's the purpose of the channel, you know? Like, that's what the fuck whatever. I'm not sitting here trying to tell you what's going to happen fucking tomorrow. I'm trying to show you, like, my methodology, right? So you have this pretty key liquidity zone here. Back here from 447... 450 something, right? You got rejected there. You popped up. So this would be like a buying climax. And then this would be like an automatic reaction, or maybe this would be. And then you have like a supply test. And then boom, you come back down for another reaction before boom. This looks like an upthrust to me, okay? I mean, you can see that the volume gets very cavernous here, where basically, you know, it's like the volume is just continuously lowering as you just continue pumping up here. And then you saw the volume raise up right when you get to selling, right? And in here, you see this selling pressure come in. When you get down to these lows, you're really getting pummeled. So what does that mean? So I see this all as like a macro kind of upthrust above the trading range. And now this was a sign of weakness. And this is my greatest likelihood that this is now an LPSY, last point of supply, sign of weakness. So overall, I would say that I'm still bearish on Amazon, on SPY, the general market. I don't think that right now we're in a place where we can say that we're bullish. If you break this trend line, then I will be wrong on my current view of it from a Wyckofian standpoint. And what would happen then is that you're probably still in distribution, but what you would see is this sort of action. And I do think you would see higher highs at that point to have like a UTAD sort of thing before you then start breaking further down. And maybe, and I mean, we've talked about this 490 level before, briefly in other videos. It's not something that I've like touted, but you know, having that sort of psychological level, where you're just shy of 500, right? So maybe you go to 480, or maybe you go to 497, something like that. And I think also it's like an extension point. So let's see. Well, it wouldn't be that one. Maybe it was here we were measuring from whenever we came up with this thesis. Yeah, so here you go. So like the 490 is like a fib. It could stop at any of these zones. See how like I kind of know where the levels and fibs are going to be. It's kind of funny, but so basically that 490ish level kind of makes sense for like a final bull trap before you really go into a more bearish turn down. And look, I'm not trying to be like super perma bear Dave and like no matter what the market has to fail, but this is all based on the longer term SPX chart, which is, you look at all time, right? This is the all time chart for the S&P 500. Here, let's go to the 3-month actually. Be a little bit. You look at the all-time chart on log for the S&P 500, and you can see that literally in the history, right? In the history of the S&P 500, the only times that you've been this high in this channel are the top of the Roaring 20s, right? Which led to the Great Depression, and the top of the dot-com bubble, right? Which led to a huge, right, dump over the course of like years. And then eventually you came back down and you kind of tested this lower region with the 08 market crash. But yeah, I mean, you have never traded, right? You have never traded higher than this trend line in any other circumstances other than macro market bubbles, okay, for the United States economy. So I'm not saying that it has to happen tomorrow. You can see that there is still some room, and obviously this line's not perfect, okay? So like, don't hold me to that. But you could still go up, right? But eventually you do have to cool down and retest at least this red line before you continue, right? And by that time, maybe it's a retest of where we're sitting right now, like you see displayed there. But I'm just saying that it is something to be conscious of. That right now you are trading in very exclusive territory historically for the United States stock market. Okay, that's something that we need to be aware of. I mean, do we ever have to go back down to this lower yellow line? Maybe not. Right? Maybe you don't. Maybe you can just hold this sort of zone, right? This was previous resistance. You popped above it, boom, and then you just kind of bounce from here, right? Maybe you do that forever. But I will say that overall, you do look like you want to retrace. Okay. So that's kind of where I'm seeing it. But who am I? Just a dude on YouTube, not financial advice, not a financial advisor. Make sure you go follow me on Twitter. Check out my Discord. Yeah, that's pretty much it. I'll leave you. Hold on, I gotta think of a song to sing. I wanna end every video with like a little sing song, okay? And I know that I'm not a good singer, by the way, so I'm not trying to make myself out to be. I just like to remind you guys of some nostalgic songs. So let me think of one. What was that song that we listened to? Oh, dude, you know what? I've my fiance, she really likes Alanis Morissette. We've been listening to Alanis Morissette. But yo, actually, I want to sing the other song that I thought was Alanis Morissette because clearly I don't know anything, but I thought that this song was Alanis Morissette because any white girl with a guitar in the 90s, it clearly is Alanis Morissette. And I don't even know if Alanis Morissette played the guitar. That's how ignorant I am. But listen, I'm a bitch, I'm a lover, I'm a child, I'm a mother, I'm a sinner, I'm a saint. I will not be a... All right, you guys have a good day. Good rest of your day. Hopefully this was a good video. Hopefully you enjoyed. And until next time. I will not be... Wait. I'm nothing in between. You know I wouldn't want any other way. All right, later.